All right, welcome everyone. It's finally Monday. I've been waiting so long for this, about 2 days, and also we got the live trading room, which is oh, let's go. All right, how ridiculous is that? With us today, we have beautiful Yiannis from beautiful sunny Bali. He's living the dream right here. The dude started trading Forex and then whoop, went out to Bali. You know?
Yeah.
Not bad.
Absolutely fantastic.
Bad place to live.
Unfortunately, I can't show you the sun at the moment because it's 8 o'clock at night here. But you can imagine.
Well, you know, the sun is always shining in Sweden. Right now it's snowy, wet, and cold.
Oh, lovely.
Yeah, but you know, I'm making money from my basement, so I can't really be arguing, you know. All right, Alex, we're both long the euro dollar, are we?
Yes, we are. I actually got chopped out around, this morning. I was originally long, and then I cut it going short, and then I ended up cutting, and now I'm back long. So I'm just actually getting back to break even.
All right.
So that's me.
Nice. Yiannis, this is the second time you're on the live trading room. Maybe we could do a quick introduction. You know, we talked about this in the last time you were on, but maybe it's a quick introduction to the people that haven't yet met you on here.
Blasphemy. Yeah. They know who Yiannis is.
Yeah, of course they know. You've been around the community for a very long time, but I'm pretty sure we have lots of new viewers now with the trading room here.
Yep. Yeah, so basically Yiannis, go as the conscious day trader. Background, a bit of data analytics in sport, elite sport, strength conditioning as well at the time, and switched to, we had a plan to move to Bali. So I wanted to, and I had done 4 Olympic cycles at the time. So I wanted something new that would be more mobile. I want to spend more time with my son. He's 1.5 years old now. So I needed something that I can do it from wherever because we move all the time. We go to Greece, Bali, Italy is our main areas where we'll go. So needed something to be able to trade wherever I want and anytime I want. And Bali is a very, very, very good place to trade because you can start working at 2. No early mornings. Nice. You can go, and I know Alex likes the gym, so hit the gym.
God,
and then after that,
Bali.
Oh, it's brilliant. It's brilliant. You do your meditations, get your breakfast in, good coffee from Australia.
Acai, I know acai.
Acai bowls. Oh, it's just the dream. It's just the dream. So the only problem is if you have like Fed announcements at 2 a.m., which was like 2 a.m. for my time I think it was last Friday. So I had to put an alarm on, just wake up, close some trades, back to sleep.
All right, so you gotta close the trades before that.
Yeah. So I normally don't close trade. I have fixed areas where whatever happens volatility wise, it doesn't matter. It's either going to go that way or it's not. So news normally creates that volatility, and something that I would wait for a couple of hours, it happens in minutes. So you just have to be a bit on the ball to make sure you're not keeping trades open and it's surpassing your TPs and so on. But that's
so with the awesome, man, awesome. I think you know what, we're getting some nice volatility right now on USD. So I'm thinking, are you maybe watching something at this very moment on GU? I know you're only trading GBP USD.
I'm so boring, aren't I?
But you know what? I since I started this live trading room, I've been mainly trading EU, and I think it's so nice to be able to just stick to one chart. You get all your trades on there. You have all your levels. You kind of learn what the currency is doing. It's and you don't have to do that. You know, you don't have to analyze all the different markets and all of that. So I think it's pretty cool to just be on one pair.
I should be more like you guys. Definitely, I'm picking things like potato versus Sol and all of these meme coins on Sol.
Yeah, but you're a crypto degenerate, though. We're talking about Forex here.
Bitcoin to the moon. That's all I hear Alex saying in the background. But generally, like I used to trade. I came from the Scruffy squad, and Scruffy always looked at 8 markets, including gold, including oil. And I used to trade really well, but after a while, I was like, I remember when I was really new into trading, I didn't know that oil has Wednesday news. I know that now it's obvious, but I didn't know that they have the rebalancing of the barrels. And I was in quite a big size because I thought I was in a great position, and boom, it just burnt an account. So I was like, yeah, that's not going to be me. I need to focus on 1, 2 assets. I really understand the UK economy. I really understand the US economy, understand the news. I say understand, I can follow it. I don't have to follow all the exotic news and so on. So roughly you can get a good idea of what is going to be moving and when. You know, like Brexit, for instance, 2016, that was absolutely huge. Nice. If you're not from the UK, you probably didn't know that was happening until the results were out. But the people that were in the UK or Europe, were very aware of what's going on in that boat. And a lot of people were not expecting the result that came out. So it was very interesting.
That was an interesting time, actually. I remember so many people as well was different sides, you know, like the older generation was all like to get out of the EU, and the younger generation were fighting with the older generation. Everybody's like crazy time in the UK, actually.
A lot of people didn't know what they were voting for, really. It was just a vote against anything.
Yeah. Fair enough.
But it did affect a lot the pound-dollar pair, and it has affected it since. It's not traded the same since. I can show you some stuff on my dashboard if you want. Like, for instance, this is my Tableau dashboard. I downloaded data from Investopedia, and I put it all in. And you can see that 2016 is when we had the entry of the Brexit exit, not entry. But the volatility, we're averaging in the last 20 years around 0.4. But if you look at the volatility in the last, from 2016 to now, it's a 50-50 split, but bigger moves. 2.6, 3.2, 3.1% down. So like the closes from the previous month, from February to March, have been a lot more volatile. And that's what we're experiencing now. And that makes it a lot harder to trade if you're a reverse trader. So if you're trying to reverse price, you can get caught a lot in the last 4 or 5 years compared to the previous. But I don't know if you want to, are you touch base, Jonathan, on the pound dollar at the moment, or USD?
No, let's take a look at the pound.
Pound dollar. So this is literally where I make all my money, or where I've spent most of the time. A lot of the time, I don't know if you guys have an asset, but I can, if I can close my eyes and I can think of the price action, maybe 3 weeks back of what is done, hourly candles. I couldn't do that with any other asset. It would just be the pound dollar. And that's the benefit, or my edge around the pound dollar, is understanding how much it moves and what it's been doing in the recent weeks and so on. Obviously, I love Fibonacci retracements. I got the bug from good old Scruff, yeah. And the Rough Guide, actually. I don't know if you've read that book.
Rough Guide?
Rough Guide, yeah. He's I think he's a friend of Scruffy as well, actually. The Rough, what's his name? Rough. Someone in the chat will remember their name. Rough. It will come to me. But it's called the Rough Guide of Trading, and his name is Rough, so it makes it kind of cool.
I'm gonna have to write this down. The Rough Guide of Trading.
So yeah, it was. It basically talked about, both of them talked about the break of the 23 and the high chance that it has to break into the 50% retracement. As we know, Fibonacci's the 0.5, the 50% retracement is not an actual fib number. It's just the 50% of the move, which it always gets respected because of all us retail people and institutional traders who know that retail people are looking at these prices. But bigger numbers like the 61.8 and 76.4 which is 100 minus the 23.6. It would give you a good base where you can start planning ideas, plus the levels. I've always stuck with the scruffy levels. I love the scruffy levels. They always worked really well for me. So a lot of people do different types of levels where you have sort of body levels or wick levels, supply demand, all the different areas that you can use that. For me, whatever sticks with you and you can do it repetitively, and you're good at getting good levels, then just stick with that. If you don't need levels and you're an ICT trader and you just look at, I love this indicator for the previous daily high and low. You don't even have to go to the daily. You would just click on the indicator, will give you a previous daily high, 50% and daily low. And some people might just need that. Are we at discounted areas? Are we at premium areas? Are we breaking the 50% to hunt for these sort of, you would call them turtle soups or Judas moves from the ICT lingo, and how are you defining? Now, going back to pound dollar, what I'm seeing at this moment, obviously we had that big push into the 129. I generally thought that I was very confident when we got to this level that we're going to be reversing, because we had broken 127 and 128 without a lot of retracement. So people that were buying pound dollar 126, it would be, you wouldn't just sit on it to get an extra point to it when you've already made 0.27 and 28. So we're talking about a retrace, or in terms of pips, I'm talking about 133 pips from that move on the news last week. So I knew it was going to be a retracement. I shorted this all the way down. Now I'm dealing with a little bit of I thought we're going to push back up to retest this level here to around the 127,600s. So I got caught with this trade. It came down, and I do something called repositioning, where I try and kill my, I try and reposition myself down. And I know people are going to say martingale. It's not martingale. It's not doubling positions. So I spread, let's say, my risk. I've been enough on lives to know that that's coming. Yeah. So I'll just preempt it. So spread your risk. Let's say you're risking one lot, spread it by 5 positions. So it's your same risk. You're just decreasing the risk as you're going and getting cheaper and cheaper price. And eventually, when the price starts going back, instead of holding all the risk of your whole lot, you can start decreasing your risk by closing worst entries and mid-range entries. So let's say this is my worst entry, my best entry, and it surpassed this entry. I would just close that, give me some equity back. I've got a good position. Break even will sort of be in between my worst entry and pretty much break even now. But if I had the second position, I would be in profit now. And a lot of people would say, a bit like Scruffy does this. He holds the positions until he makes his money. But what works for me, and that was the key for me, because I think the title of the video is how do you get a lot of payouts? You have to identify what works for you. Because a lot of the times you would see price go up through your 2 positions and then reverse and smash back down and take your stop. So I wouldn't have that psychology to hold that. So my way of trading in terms of closing positions is purely because I know how my nervous system works when I'm looking at price action and how it behaves, when I hold positions.
Yeah, I mean, the idea that you, like you said, you know how your nervous system works, and you kind of like, you can trade based on that. That's obviously very few people can say that, right? And I think that's why a lot of people are struggling in trading, because they don't know themselves at that deep level that is necessary to know, where your edge lies, because not only do we have that technical edge, but we also have that mental edge,
Absolutely.
And I think a lot of people are struggling with that. And like you said, I mean, the way you're trading, I could never trade like that. I mean, the way that like you're in a losing position, and then when you would open another one, and when that one goes into profit, you'll close that and make some of the loss back of the previous one. That is a way that I know it's not part of, like, I'm not going to be able to trade like that because it kind of goes against what I do in the market in terms of, you know, trading personalities. I think it's very important that you find what works, you know, and then you stick with what works for you.
I always say there's sorry, Alex, go ahead.
No, it's funny that we're mentioning, obviously, we mention it quite a lot about finding what works for the person. I think I was speaking to a lot of people recently to help them with their trading. And one of the biggest things is they're kind of, you know, they're trying to do swing trading, but they're actually quite an impatient person, and they're quite impulsive, and, you know, they like instant gratification. So then they're trying a strategy that is just not coherent in their kind of personality. So, you know, the things that we talk about, it's the hard thing to find out what strategy works for that particular person. But as soon as you get that, I was another guy I was speaking to as well, that he was also doing more of a swing strategy, and then he went to actually just scalping gold, and he actually had a minus risk to reward ratio, so he'd only go for 10 points. He was willing to lose 30 points, but he was to get 10 points, and he had like a 90% strike rate, and it was fantastic because he would be blowing all of these other accounts trying to swing. As soon as he changed it to fit his personality, he had a fantastic win rate, and he's making money and making payouts, and it's absolutely crazy. So
I think I think we become a little bit of a repetitive, with the danger of being repetitive here.
Yeah,
but think of trading of any career. You know, you're going to have to try and test and learn things for multiple years in order to be successful. The problem is that as traders, we think that we can jump in and suddenly become a 10-year-old trader. It doesn't happen like that. You just need time. Look at the experienced traders. Look at, I don't know, ICT has done it for so long. Scruffy, for instance, I think it's 18 years of trading, or 15 or more. Is like, imagine the experiences, the drawdowns, the blowouts, all the things that they've been through. And now they are in a position where they can say, I'm comfortable to speak out and say this works because I've done it so many times. I've seen everything under the earth that you haven't seen yet. So when you're asking these questions, these people have a little smile behind, because they're like, you know, I know where you are and I know what it takes to get there. And the biggest question is, are you willing to hold through the difficult periods and not to get too excited with the good periods? And that slowly is a good recipe to become profitable and make it into the industry.
Yeah, I think we need what's that word? Resilience, right? Emotional resilience is a very, very important skill, because I mean, I've been beat down by the markets, you know, so many times, and obviously I'm still here. So every time I've been, you know, I've stood up every time and said, like, well, you know, this is a setback. I'm going to move forward. I'm going to try this once again. And you can't quit. You know, that's the thing, because, you know, we all of us three here, we're here because we never quit, right? And all the great traders out there, the reason why they are great traders is because they never gave up. You know, they never give up. I think that's super important.
Can I ask a question to both of you? Let's say is there a certain amount of money that if you made, you would never trade again? Oh,
for sure.
Go on. Is that your own number? You don't have to say it, but so you're happy as soon as you make that specific amount of number, that's it. You don't need to go trade, and you're not even interested in trading.
I think if we are going to be realistic, anyone who is enjoying trading, they're either for not financial gains, is either there for the rush of losing, like adrenaline rush and winning, which is pretty much gambling. Or you're this person, or I haven't met one person yet who just loves looking at charts with no benefit at all, just looking at the painting of the charts going up and down and trying to analyze it from a mathematical perspective, or trying to understand the world's economics. I haven't met that person who's not doing it because they want to make money. So to answer your question, Alex, I think everyone in here and the people in here, any other person in the chat, if you say, look, would you quit today if I gave you 2.5 million right now? I think everyone would say, yeah, I'm happy with that. I'm happy to not look at another candle and just go and enjoy, or invest in a different way where it's less stressful. And maybe I'll jump onto a chart once every month to see what's happening in my good old pound dollar or whatever. Yeah. But in terms of a number, I've got into this trap now where your standards of living just increase.
All over the world, yeah.
Yeah, and if you want to be in a big house, you want to be flying business class, you want to be doing things, which everyone has different ways of enjoying life, right? Someone might enjoy economy, someone might enjoy business. That's the same thing with different price ranges. One will cost, I don't know, a couple of £100, the other one will cost a couple of £1,000. So if you understand what you know and you live very, very comfortably, and money is not an issue with any decision in your life, I would argue, why sit in front of a screen when you can be at the beach and, you know, doing other things and enjoying life? Mm-hmm. That's my argument. I don't know what Jonathan is going to be.
Well, you know, if you give me 10 million, I'm out. I won't even look at a candle anymore. Like, give me that, and I'm out. I don't care about trading. The thing is, you know, to become a good trader, you need to kind of be obsessed with making it, right? But it's the same with any business, right? You want to be making a bit big in business. You kind of want to be obsessed with, you know, making it, right? And the same thing goes with trading. In the beginning, when I started trading, I loved TA, right? I loved the idea of, I saw TA, technical analysis, as almost something magical. And it was my goal to kind of understand what it is. Today, I'm working. This is a job like any other job. All right, I'm working as a trader, and this is you know, like any other job. I do, you know, I have to treat it like a business. I have to treat it like a job. So if you ask me, is there any amount of money that I could get to stop working? Of course. But like Yiannis said, I'm probably gonna be like, I'm probably gonna take a trade anyway, like once a month or something like that, you know, even if I quit, because I do think I'm never going to be able to, like, you know, go too long not watching a price chart. Like, I really want to know, like, what happens with Euro USD, what happens with Bitcoin, especially Bitcoin, you know, unless like it completely crashes zero. So I think I think we have to kind of like
here's a question, Jonathan. You said 10 million jokingly. What if I gave you 5 million?
I'll give you 500,000. What are you talking about? What, I can do 500,000, you know?
Well, give me...
The number is important, isn't it? Because if somebody said, look, this is the real deal now, I don't have 10, but I would give you 5, but you never have to
so you have to do the calculations. Like, remember, so first of all, let's assume that's tax-free. I live in Sweden. It's stupid expensive here. I actually do have to, like, in the back of my head, do some calculations, you know. How much do I need to, survive 1 year, and then try to do the calculations till, you know, late age. And dude, it's a lot of money. It's a lot of money. So the figure for me to, like, stop working, obviously, like, retire, that needs to be a big figure, because, like, you know, it's a lot of money. Like, maybe in Bali, it's you know, cheaper. But like you said, if you want a good lifestyle, it's going to be expensive wherever you live, you know.
You can do other things. Yeah, I was only talking about trading. You know, you can relax.
Oh, well, if you give me 500, I'll take that 500, and I'll open an account. Start trading.
Just put the account on, like, an ISA or something.
It's like copy trading platform. Like, let's go.
It is interesting what you said though about there are people that are coming here, you know, it's a means to an end, and there are people that are coming here for a thrill. I think when you first come in as a new trader, you're kind of more in the thrill zone than you are in the means to the end zone. I think the more you mature as a trader, and the more that you start to see, you know, the good parts and the bad parts of trading, more you turn into the zone of, okay, now it's a means to an end, and this is a job, and this is what I've got to do to to make ends meet or to make a living, you know. So it's quite an interesting topic.
And Alex, we have to be honest with everyone. Being a full-time trader, I don't know how many people are a full-time. I'm a full-time trader. I don't make any other money. It's stressful.
100%.
It's stressful because
I'm lucky I don't have to do that. I've got a, you know, I work at the 5ers and I have income coming in straight away. If I had to rely solely on money that I was getting from day trading Forex, you know, I wouldn't be looking this good, guys. I just wouldn't be, you know.
Yeah, guys, I'm not doing this full time either. I've always viewed trading as my main occupation, but like I never view it as my main. Well, I do see it as my main income, but if I would be trading, I don't think I would be able to trade full time, because I've done that, and it's way too stressful, because you're 100% totally dependent on your trading to survive. And when
tell me another job. Sorry, Jonathan, to interrupt.
No, go ahead, man.
Tell me another job apart from the Olympics or any athlete or anything like that.
MMA.
Or MMA, or like sort of performance like activity. Any other job where you have to value your worth and your money on a daily performance. That doesn't have, or if you're swing trading, a weekly performance. It's very, 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 very tough. And I think it takes and I know we're in the industry where we're talking about the 1% who are making money, and the 1% of the 1% who are making and make good money. That is the statistics, so don't lie.
Yeah.
And yes, one of the biggest issues that people don't make it into the 1% is because they quit.
Yep.
After you do it for a year, you do it 2 years, and then you quit. But imagine doing your current jobs now where you were just like, I'm just going to do it for a few months, and I think I'm going to be the best expert in broadcasting, best expert in talking about cryptos. It just doesn't happen. You just start crap and then you slowly build your knowledge, and you slowly get better and better and better. And if you last long enough, you've learned all the lesson required to take the ticket and just get into that top 5%. And then you have to, almost like an education from university, you have to graduate from there to start thinking about masters. And you're mastering, I don't know what assets you're trading, but slowly your psychology, all the things that are something that people talk about, and it's kind of niche. You actually live it, and you're like, oh wow, so I know how I feel when I'm in an 8K drawdown. I know how I feel when I am over trading because I've had a good profitable week. You start building that library and knowledge, and suddenly you get to a stage where you're like, okay, if I was to do this for living, and I have to pay the bills every month, what is the minimum risk I can do it, my trading style, which I need to have some aspect of learning in there because I'm going to make mistakes, but not to compromise my living standards of what I want to make and be able to, in this instance of getting payouts every month from like 5ers. That it is a difficult calculations that you have to put there for yourself, and you have to do the hard work. And we're very lucky to know people that it is achievable. So you just have to be very, very meticulous with, or fall in love with learning about yourself. That is the biggest.
I think one of the biggest challenges I had was, like I said, figuring out how much money do I need to make consistently throughout the year, and when I make more money than that, how much should I save for the month when I make no money at all? And then you have the taxes on that, right? It's easy to just go to a job and get your salary, taxes paid, everything's good, and you don't have to worry about, if you have a bad day, you don't lose money, you know what I mean? Like, you're getting your salary, right? But with full-time trading, you have to do all of that calculations yourself. You have to make sure that you save money and you have a buffer for the months when trading doesn't go well. So yeah, it's very stressful. It's and I usually say, you know, to most people like that want to go full time, I usually ask them like, do you really want to go full time trading? Do you really want to be doing only this? And if you do have a job where you're actually able to do both, then probably stick with that job for as long as you can until you feel like you have a good buffer to really take the leap to go full time.
I 100% agree with that. I think I was one of the person who jumped kind of cold into trading. I was confident that I had some savings. I was like, okay, I need to make this work. And I was very, very part-time. I used to do like personal training after the Olympic cycles. I had a few clients that became sort of like, I couldn't let them go. But that almost like created a tiny, tiny small buffer where you were like, okay, at least this pays rent or something. And then how can I slowly build that rent to paying the holidays? And how can that holiday then start paying for our lifestyle? And then slowly you build up and you're like, well, if I only had this prop firm, my risk would be too big. So then you start opening another account, maybe a personal account that you're building, and you work it together, and you're having now two accounts. So one profit is almost like double your profit, and you start building almost your empire. So account by account, you're just creating safety, you're diversifying a little bit, and then you're slowly sort of getting into the races. But I have to say, like you said, I think it's extremely hard to say, I'm going to go full time with this. And the people that are trying this, be prepared for a very ups and down wavy sea, because you do have to go through the sea. You have to go through blown accounts. You have to go through drawdowns. You have to go through big profits and try to losing it all again. And we're only talking about the first 3-4 years. Imagine that 10 times now.
Yeah. I think, you know, for those watching, if if you're familiar with, maybe you have a business, maybe you had a business, ran a business, I think that's quite familiar to trading, because I do have my business on the side so I do trading, and I got my business, and so I try to have as many income sources as possible to kind of remove risk from each of these, right? And I think, you know, the same stress and the same uncertainty that I felt when creating the business and working on the business, and I think that is very likely very similar to the level of stress and the uncertainty that you feel in trading. Because you're basically like, you're working with probabilities, and that's very difficult for us to do as humans, to kind of get thrown into a world where you don't know if you're going to make money today. Like you have no idea if you're going to make money this month or this week or this day, and to just be okay with that. Just, you know, go with the flow, follow the system, and then if the market decides to you're going to make money this month, then you're going to make money. It's a difficult mindset to get into.
The biggest thing, Jonathan, I'm not saying this, and I'm sure you're saying the same. I'm not saying this to discourage people. I'm saying this to empower people, because you have to. If you're in trading, you think you're unique, right? No one in here thinks he's in trading. If you think you're going to break the 1% of competition, you do think you're unique, and a lot of people, it takes a lot of effort to get that out of them. Because a lot of people say, well, do you think you're unique? Yeah, I am. You know, I've done some things. Kind of. What about trading? You think you're unique? Not yet, but I will be one day. That's not the attitude that's going to get you there. You have to feel that you are the best of the best, and you just haven't found the knowledge yet that you require to make it. And so you're on the journey to fine tuning your tools. That you're going to become that 1%. And we have a Discord in the Vanguard, and one day I did a little presentation to them, and I just explained to them how special we are as us individual. Because if you think of the evolutionary tree of what we had to go through for us to be here today, we are so special, and we're the tipping point of our ancestry. We're the last ancestor that are alive at this moment of time, who is performing for the whole evolutionary tree of your generation or multiple generations. So you should feel extremely special that you're even here.
Yeah, and you know, with that in mind, don't fuck it up, guys. Like you're the end of your line. Like you have your whole ancestor behind you. You gotta make stuff right. You put that stop loss in, you make the analysis, you follow the plan, don't do anything stupid in the meantime. make those ancestors proud. No, but I think like what we're doing here is we're talking about expectations. Like we're trying to give people realistic expectations here. Like you're not gonna get an account and then become a millionaire, the month after. Like this is years. Like what I'm doing here, like this is years in the progress. Like I've done this for 7 years and I'm learning every day. I'm still learning. I'm still adopting. I'm still making changes to my system. I'm still, journaling and improving every day, because I know that, the day I stop caring about personal improvements, that's when trading is I'm done with trading, So yeah, it's very, very important. And treat this as a business, like a job. Like you go to your job and you take care of that job, and you take care of that job because it's your income. You can have the same mentality with trading. I see way too many people, they think it's going to be easy, and it doesn't really matter. Like I can give you a profitable trading system. Like we can all here tell you the exact details of what we're trading, but you're still not going to be profitable until you put the screen time in and you actually do the work. I think that's what it's all about, having the positive, the right expectations.
I think this is where the trading industry, marketers in the trading industry are actually going as well, because I don't think the marketing works anymore with just showing Lambo. Well, obviously it works, definitely, but I think more educated and more, experienced traders are seeing stuff like that, and it what people are just saying on YouTube and all of the clickbaity marketing just doesn't work too much. And now people just want the real thing, real how trading actually works. People relate to that a little bit more. So the people that are, and that's why it's important for us to communicate that in these streams. And what we've been doing for the last, 20 minutes, blabbering on about all of this stuff is super, super, super important. So.
Indeed.
Yeah, sure.
Talking about charts, we're just breaking a level on the DXY. So this will be interesting in terms of my sort of trading. If you think of ICT, what's happened here, we'd had the liquidity drag above. We didn't break the previous daily high. It came down, retraced back, filled this fair value gap here. And if you don't know what a fair value gap is, just a formation between three candles where the body, let me just zoom in so you can see that, where there's no wick or price in between the left side and the right side. Is just body, and it taps into that and then starts selling off. Another body is created here, another fair value gap there from left to right. So this area here comes back, taps it pretty much to the full potential. I am using ICT terminology. You can use Fibonacci, and this is the same thing. I'm sure this is going to be the golden zone. So if you take this,
Alex, we should have put ICT in the title. How could we forgot about that?
So this is 50% retracement, retaps into the 76.4 and then starts selling off. So that is same stuff, different terminology. So we're selling off below now to the previous daily equilibrium. So what happens when we start looking at equilibrium? This is the decision of the day. So what are we going to do now? Are we going to become more discounted or premium for the pound dollar? If we're going to become more premium to the dollar, it means that we're hunting liquidity below this swing low here. And why? Because that is the first discounted arena from the previous daily equilibrium. And in simple terms, what that means, this was the arena that price was traded yesterday, right? And we've come to the half point of that. So even if you were a buyer or a seller, you would be interested around this price. So this is a decision time. So who was more interested? Is it more? You can see that happening here. We got to this sort of area yesterday, and then the price just flew all the way to the top, created this turtle soup here, which means taking the highs of the swing, and then the classic
like
ICT.
Quasimodo kind of thing.
Yeah, I can see that. Yeah, Quasimodo. Yeah, I like that. Is that your terminology, Alex?
No, Quasimodo is a pattern. Yeah, it's a
Oh, is
pattern.
it?
Like, yeah. Gil. A lot of people use it. I know Victor in our Discord, he uses Quasimodos and order blocks. And Gil also, the way that Gil started trading was somebody called Read the Market, somebody over in Ireland, and the way that they were trading was supply and demand and something called Quasimodo. And it's basically what you would look at something like this. It was like price going all over the place, making, head and shoulders and things like that. And basically what we're looking at now is just like a Quasimodo, but obviously different terminology helps with people remembering what it is. So
I mean, the terminology, and you can see that in so many ways. I saw someone in the chat saying you got head and shoulders there. So for instance, if you where's my brush, what is talking to about this here formation.
Oh, but careful what you're making.
it's your dirty mind. It's head and shoulders. But what we're doing is pretty much that would be a formation set, not Alex's formation, but this head and shoulder formation would be selling off below the previous daily low, previous daily equilibrium. And where would that be going? And then then you start thinking, oh, look at this area here.
Yeah.
What would that look like, the Fibonacci? If you take the previous daily high and low, exactly at this area is the 76.4. What is the 76.4? It is a fair value gap. Oops, take that away. Where's the 50% of that roughly? If you take and you make that a box. Now, I love the trading view added the half.
Oh, point. Wow. Didn't know that.
Yeah. So I can actually click on it now. So you can go on here, and then you go to the bottom middle line. There we go.
Nice.
So then you can see the 50% of the fair value gap in the box. So if you are looking for short opportunities, where would you be looking for liquidity to start kicking in terms of US dollar long positions? It would be this area here. Yeah. ICT calls it OTE. Now look how these different methodologies come to align with each other, right? So this is fib retracement, 76.4. If I switch this and I put an ICT OTE entry, 79% is at the 50% of the fair value gap. So it's exactly the same arena that they're looking at. Different
OTE,
minds.
what's OTE, Yiannis?
Optimal trade entry. Oh, okay. So ICT has this a video. He's made a video about if you're looking for you have your bias, you want to go, let's say, long. What the price will normally do, it will look to retrace, which is the golden zone, but he's rounded the numbers to be extra special. So the 61.8 is the 61.8. The 70.5 is the 50% between the 61.8 and this 80%, which is the people. I use the 76.4. I do like the 76.4 because it's a fib number. ICT for some reason uses the 79, but it's roughly similar arena. We're talking about 1 or 2 pips difference. It's not a lot. So if you're looking at this anticipation here, so what you would be thinking about, and this is not financial advice, it's just me sharing my thoughts. If we were to retrace before we go higher, this would be an area where we'll be interested in. The second area would be below the previous daily low. That's where liquidity lies. In terms of, think of the orders of the day, closing of the day. All these orders have been left behind. Look how many buys we've had here. The 3 consecutive hours without any retracement. So anyone who wanted to get involved in this arena here has not had a chance. So it's highly likely if we start breaking the 23 of this, and I need to change the OT. Give me a second. Go to my normal retracement. Just kill that as well. So now, look at, funny enough, where the 23% is, we're just very close to that level, and it will be the liquidity draw. So if that, what my friend said in the chat there, head and shoulders, if that was to continue down and it closed below the 23, then we're starting to think, is this going to retrace to the golden zone of the hour? The higher you go up, so you got the hour, the 4 hours, then you start thinking, right, this has more, it's more interesting because it's higher time frame. Higher time frame is more institutional time frames. they would never start looking at 1 minute, 2 minutes just for execution. They will look at daily, weeklies. And that's why the Fibonacci retracements are much more important when you look at the daily, weekly, monthly. So this way, at the moment now we're looking at intraday 1 hour. If you can put that on a 4 hour, will be the same. Look at this. Beautifully laid out. Fair value gap exactly on the golden zone. So this will be a nice area.
It's funny how everything just sometimes just lines up all together, and you're like, wow, gosh, just looks too good to be true sometimes when you just put everything together.
Yeah. Does it mean that it's going to happen? No, but we know historically, if we take the previous, look at this leg move here, historically, this happens over and over again. 76.4 there, fair value gap, boom, retrace, continuation. Maybe you can take another example where it's not happened, but like let's say this one here on the downside. If you were looking to continue short, you would get caught in this, but it did give you an opportunity to get out. Right?
I actually want to. I'm watching. So I think I really want to show my Euro USD trade here, because it's basically the exact same thing that you're showing here, because it's on. If you don't mind me to switch over a couple of minutes.
Yes, of course.
Let me just go in and share my screen here. So as you guys know, the dollar currency index is most of the time moving very similarly to Euro USD, because it's I think like 70% weight to the euro or something like that. Anyway, so what you showed, so this is the inverse of Euro USD. So you can put the dollar currency index on here, and it's basically going to show a very similar structure. So just like you showed here, this level right here, where you had something like, maybe a head and shoulders, something like this, I don't know really where it would be, but something like that, right?
Yep.
So you talked about what I did here was. And I got it reversed now just to show you the how well correlated EU and the dollar currency index is. But if we go to what it actually looks like here, the idea was that I had was based on, and I'm using similar fib levels. When you said that the ICT talks about the 79. Well, I have the area between the 0.618 and the 0.786.
Yeah.
So these are the actual fib numbers. And usually what I want to see is a breakout structure, or perhaps a double bottom like this, a W. And then I like price to come down to retest the neckline of that W. Now I'm really drawing something here. So...
It's all right. Alex is distracted.
Yeah.
I'm just looking at my book of Shiba that I bought is now $8 from where it was 400 the other day.
Holy shit! Wow. Anyway, so I put the fib on from that low to this high area, and that brings in the reload zone, as I like to call it, right on the neckline of that W. And then we actually looked at the same area where we talked about how we had this level right here. That was my TP1, so I closed 50% here just now. Nice. And if we're looking at, then we're switching this back, you also remember you talked about this level below, and that would actually be my last TP. So it's very interesting that two different traders with different ideas of watching the market are using completely different names for all of these things, and even different fib numbers, but we come to the same conclusion. We see the same levels, and it's just interesting that different traders can come to the same conclusion with way different technical analysis.
Yeah, I know there's a lot of people that say fundamental analysis is the way, technical analysis is the way. I always find it very hard to have conversations where people have closed minds, like whether this is the way that I trade, because yes, you might be an extremely profitable trader and you might only be looking at fundamental analysis. Now, I had a great chat with a fundamental analyst who was like, okay, because I knew he's going to come at me for technical analysis. Like, okay, I'm going to tell you some prices and you tell me if they're interested. And I just did my normal analysis and I just said, I would buy at this. Then we went on his books of what he potentially was going to buy. He couldn't show me, but because then it would be information, but he confirmed that it was very sort of like similar ranges that we were looking at. And that just gave me confidence. So it's almost like these guys are just not interested in the, 127, 2.1333. That's just the outcome of them trying to get a 127 because they can't get filled at 127 for their 1,000 lots. It's going to take some spreads. It's going to take some time to fill their orders. So they give a percentage of up and down, 1% up, 1% down. And then you will see all these fluctuations. These fluctuations is what we call manipulation and stop hunting. But in reality, a lot of the time, it's just prices that are around big numbers that are getting filled 1% and 2% above or below. So it's institutional trading getting filled, either hedging the positions or actually getting into new positions because of it, new interest rates and all the lovely stuff that Jordan likes to talk about in Traderlicious with his fundamental analysis.
Mm-hmm. Yeah, no, you're absolutely right. I mean, I know some fundamental traders, and they, when I talk to them, it's like whatever they say, like I don't really understand what they're talking about, honestly, because it's a whole different world. I mean, it's a whole different world. I remember one guy, he gave me this book, like, I read this book, you're gonna understand everything that I'm doing, right? And I start reading it, and I'm like, this is not for me. You need to understand way different things than in technical analysis. But just like you said, the interesting thing is, he messaged me like saying like, I bought this level on EU, and I'm like, yeah, I bought that level too. And he's like, why did you buy that level? Like, because it hit the 0.618, duh. And he's like, well, because the Fed is expected to do this and that. So it's just interesting that we're looking, but it's all like it's supply and demand, and you add your horizontal levels at around maybe even numbers, and you see that it lines up, and this level has been get rejected. This level has been used as support and resistance for the last 5 years. I mean, obviously there's going to be some type of reaction. That we know that whether you're using TA or fundamental analysis, you're going to have some interest in those levels.
I always find I find this. I don't know if you can share my screen, Jonathan. I find it quite interesting because just keep it simple sometimes, right? Let's if I take let me see if I can delete all my charts. Not delete, hide, hopefully. I don't want to do all that work again. And on the left side, as you zoom out, what happens to the chart? You start seeing round and round numbers, right? So it becomes so much simpler. You just see a price range. I'm just hide this as well. Just hide price range. If you ask a 10-year-old who is doing algebra at the moment, and they're doing all the lines and stuff, and you would say, if you look at this chart, where has most price been traded at? And you would probably go and find, I don't know how you would do it. Probably a 10-year-old wouldn't start doing Fibonacci retracements, but you could see like roughly, let's say here, you could see that most in the middle zone here is the area where everything is traded. Now, where is that line about? It's about 128. So since 2019, yes, we had that huge stupidity in the UK of trying to decide to change the bonds overnight, which was like, what were we thinking? We nearly lost the pound there. But that got correlated and sort of fixed itself back up. And where has it been consolidating for pretty much the last 2 years is around that 128 arena. It's because people are happy to trade around these arenas. So what do you do next when you start zooming down to weeks? Okay, so we know that 128 is interesting. Has it been tested before? Look at these wicks here. They're all on the 128 arena. And if it goes up, the higher it goes up away from it, the heavier it starts selling off, because they want to push, make sure that this price is going to go back to where we're happy. And that happens over and over and over again. And you can do that with all the numbers, and you'll see 126, for instance. This is quite an interesting one because the wicks are actually on the 126 multiple times, exactly on 126. This is not random stuff, and it's not magic. It's just that people put orders at round numbers. Well, not people, mainly corporations and hedge funds are willing to sell at that price, or are willing to buy at that price. Now, all the price above and below, then it's algorithmic trading for the clever retail traders that are trying to make money in between these numbers, like us. And a lot of times we get caught, is because these are algorithms that are thousands and thousands times more clever than us. And I know ICT has the theory that you can understand the algorithm. That's what you're trying to do with impulsive moves and fair value gaps and all the lovely stuff that you learn from multiple different traders. But in reality, the further out you become, the simpler the chart looks, and you can trade it just by start looking at just simple numbers and say, just be curious. Why, for instance, this is so condensed around this arena? And the fundamentalists will come and say, oh, that's the period where we were trading at 134 because the interest rates were doing this. Another trader will say, okay, all I see is that there was a lot of interest. You're both explaining the same thing. One is counting candles in this interesting area. The other one is explaining it from a fundamental. Now, there's another behavior. Why on earth did this happen? That's very different to this, right? And it's simple to see, but you don't know why, but you can see it. So when that massive thing happens, you know there's going to be reactions, because we've never been to areas down here. You cross to your left side, there's nothing. There's nothing there. So what's the chances of this price staying down there? We're either going to lose the pound dollar, or it's going to reverse and go where? Normally to the mean, because that's where most people are either caught because they've got caught here and they want to trade at normal price ranges. So they want to see the price come back up to something they can get out of their trades. So you can see how you can bring like simple concepts. Sometimes we make it so complicated and we just get lost with paralysis, with analysis. And it's sometimes you just have to just be calm. Yes, get into the 15 minutes, 5 minutes, 2 minutes, and you're going to get caught. But take a breather and see where is the bigger pictures. For instance, we haven't seen what the dollar index is doing since we've been breaking this. So now we're hovering below this area and it's come back and found that level. Are we going to hold below? If we're going to hold below, then what Jonathan was talking about, it's highly likely that we're pushing down to these arenas. Is it a nice area to be involved? That's when you have to start thinking about your stops. Can I afford this? Where is your stop? Is it at this high? Can I afford a 20 pip? If I can, happy days. If it goes here, I'll take the loss and move on. If you're not doing repositioning and pound averaging and all that stuff. Otherwise, if you think that this is just a retest of this level, and as you can see now, it's wicking to the upside. If it holds and goes higher and you want to go long, you can target those highs because everyone will be putting their stops there. If it doesn't and it's consolidating around there, then you have a slow day. So what? You trade tomorrow. You can keep it really simple like that.
Yeah, no, I think that's what I always try to say. And I mean, it's all about simplicity. And I think the key to success in trading is really to find out your niche in the trading world. Like find what you're good at, right? And then try to make it as simple as possible and just zoom in on that one thing and become really, really good at that one thing. I think because like I said, analysis paralysis is a big thing. We overcomplicate things and we make the most simplest thing way too advanced. I think that's a big problem for a new trader for sure. All right, Yiannis, it's been an hour. I know in Bali it's quite late. Should be around 9 now. Yeah,
it is indeed.
Should we have a break? A 10-minute break? Oh God, my voice.
Yeah, so we'll take a 10-minute break, and then Victor will come on, and I guess Yiannis, you want to perhaps get ready for that beauty sleep.
Yeah, where can everybody find you, Yiannis, if they want to find you?
So the conscious, actually, am I Conscious Day Trader? It's Conscious Day Trader. I think I changed it. Conscious Day Trader is the YouTube channel. Actually,
or is it?
It is.
You've changed the name now.
No, I haven't changed it. But I think the. Let me just bring.
I hope you have it, because I have it all in the description.
No, we're good. So Conscious Day Trader, you'll find me there. Because of all the discussions we've had earlier, that doing this for a living, it becomes a lot harder and stressful. I have decided to, and I know a lot of people were sad about this, but I've stopped doing live trading every morning, and it was very selfish of me to do that because I wanted to get more money. I needed to perform better. I gotta give it to you, man, because it's trading live. I don't think a lot of people, it's taxing. Trading's taxing in general, but trading live and trying to perform, and sometimes because you want to get those numbers and you want people to say, sometimes you're getting maybe prematurely, maybe you put in a little bit of extra size. Sometimes you get into positions where maybe you would have waited a little bit longer, So it's fair play for you, just kind of. I think it's it's great, and I love doing lives with you guys as well. And you can see, like I've heard Alex say, some people, oh, I know this guy, he's been here every day. You get that connection with people on live trading, what you don't get in videos and comments and so on. So you get that live sort of interaction. And I am sorry to the guys that would come and wait for every live, and they were always there. But if this was a part-time job, or YouTube was my actually way of making money, then I would have done it. But you have to be realistic at some point and say, why would I compromise my performance and put something else that is enjoy it but not make as much money as it would by doing trading. But I will potentially do some live sessions when the markets are becoming a little bit easier. They have been a bit hectic recently, but yeah, always you can reach me there, and obviously on the on Instagram as well, Conscious Day Trader, the same way.
Nice. Brilliant.
Awesome,
well,
man.
There you go.
Thanks.
We're gonna go on a 10-minute break, and we'll see you guys after. And Victor's gonna be with us as well. So see you in a bit.
All right. Thanks for joining, Yiannis. Take care.
Bye.
Hello, 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 hello. And hello, Victor.
Hey, guys,
How are
what's
you,
up?
my friend?
Can you hear me?
We can.
Yes, we
indeed.
can hear you.
All
How are
right,
you, my
thank
friend?
you. I'm fine, thank you. How are you guys doing?
We are.
I was actually
I'm
in the middle-
doing fantastic.
Yeah, I was Mr. Right. I was literally. I didn't check the clock. I was about to eat my Greek yogurt and muesli, but unfortunately,
Greek
it's still right
yogurt.
next to me. Yeah, so if you guys want to
It's
carry
just-
on chatting,
just-
I'll just.
Oh, is it the pale
I'm
yogurt? No, you don't have anything in it.
No, well, Greek yogurt, muesli, got a little bit of honey in there, peanut butter. You know.
Oh,
that's how we
nice.
do.
Oh, man.
Yeah, we gotta
Sounds
keep the energies up
delicious.
for streams. And sand
Good
is not
stuff.
doing anything. Why isn't it pushing up?
Sand. I got in a beautiful position on sand.
I know. I got in a little bit late.
What about Bitcoin? Are we rich? No, we're not rich. It's I am pretty. It's looking pretty good on EU though. I want to switch over to EU. Just take a look at my trade here. Can show you the. I want to show you the reasoning behind this trade right here. So as you can see here, this is quite a big move. I'm the last TP. I'm targeting a 77 pip move here, and I've got obviously had a very good very good entry here, I believe. So I actually saw this morning that we had first that 4-hour candle, and we came down and we hit like these lows right here, and then I woke up and I saw that 4-hour candle, and we were trading in a pretty good area right here, and we came down and we hit the kind of like the neckline of that W wick right into the reload zone, and I was lucky enough to be at my desk when we hit that level. So I just market enter with that stop loss. And actually what I'm doing right now is, first of all, I actually looked at this as my first and only TP. I wanted to get out of here fully, but then I remembered, I'm trying to, like we talked about last time you were on, Victor. I'm trying to combine scalp entry with swing targets. So I got that scalp-ish entry, and now I'm trying to I took 50% TP here. I'm going to take 25 here, and then I'm going to let the rest of the position run up to that area. And I think that's the way you want to do it. You kind of want to make sure to let the trade run.
Yeah, I agree a lot with what you're doing because there's not like one right way doing things, right? The scalper or the swinger, there's no one right thing. What you want to be doing is something that fits your personality, and of course the time you have available, right, to trade. So. Yeah. And what you're doing, and you're a full-time trader, so you have the benefit. You could be doing both, and if you can merge those two approaches into one, like scalpish, like what you called, how you enter, and you try to hold those for longer targets. I mean, that's the best of both worlds. I think that's the way to go, because the market will offer you. Sometimes the market will favor a scalper, right, when it's ranging. And other times it's going to be favoring, like a swing trader, where it keeps on ranging or not ranging, but I mean trending. So you want to be able to trade both of them if possible. Of course, that's not possible for everyone, right? Because some people are just scalpers, and that's what they need to stick to because that works for them. And others, they don't have the nerve to be in and out all the time, so they just want to get in and hold the position. And if that's the case, then you should stick to what works. But if you could merge those two things and recognize when you should be more of a scalper and when you should be more of a swing trader, I think that's the sweet spot where you can be versatile and win not in every situation, but you will be able to adapt to what the market is showing at that particular moment. How are you doing, Alex?
Welcome back, Alex.
Thanks, man.
I wanted to ask you, the Greek yogurt, was it because of the taste, or was it because of
The protein,
content?
baby.
Protein.
Mhm.
Yeah. That's what
That's
I
why
thought.
we're doing the Greek. Yeah. If I wanted something for the taste, I would definitely not have Greek yogurt. Just on its own. But for the health benefits, like it's really good for the gut, good for protein.
Yeah,
all that
definitely.
stuff.
No, great. I'm happy to be back, man. I've keep looking forward to this. It makes my my trading like, you know, the pepper when you have a good steak, it's great. The steak is great, but if you put that little pepper on it, salt and pepper, it makes it just a little.
I'm the garlic and butter type, you know.
Oh, fucking love garlic, man. My fiance is like, when we barbecuing, like I had like did a barbecue yesterday, and I have to have like two steaks, like one for her, and one for me. It's like mine is just full. It's garlic. I love it, man. I love it. Garlic and butter.
I got something I want to show you guys. Maybe I will do it today, maybe in a couple of days, but I haven't shared this with the audience yet. But well, go ahead.
You want to show us something?
Yeah, show me something. Show me.
No.
No,
actually,
you wanted to show us in a couple of days. You're teasing something here. Are you?
I'm not sure if I want to show it today, but or maybe I might. But I was since I started being on this show, the idea was that I would be trading a demonstrational account, right? To demonstrate how I trade, so I can trade online.
I sent you that, by the way.
All along. I beg your pardon?
Have I sent you that account?
Yes, you have. Okay,
thank you. I thought we were getting to the point where Alex, you still haven't sent it.
No, I did get it. The only thing was that I didn't get any entries, or maybe I don't know what the exact reason was, but I haven't shown the account yet. So I was like waiting, like the moment to show the account. Okay, guys, I'm gonna be start trading this, and it's not the it's not a 100K, so it's more an account other people might relate to more easily. But I traded it on. I started trading last week, and on Friday I got like a good entry, something that was screaming an entry to me. So I stepped on the gas, and actually I think I already passed or almost passed the phase one on one setup.
Sick.
Yeah, so I don't know if I want to show that today or maybe in a couple of days, but I've got that. So one of these days I will show you guys, show the audience the entry. Yeah, that's what I wanted to share.
Was it on EU?
It was on GU.
Was it on? Let me have a look. Let's have a look. What was the day? Was it on the 21st, which was Thursday?
No. It was on Friday.
Ooh.
Friday. Ooh.
Yeah, it was on Friday.
Ooh, you took it short.
No, actually, I took a long. It's yeah.
Okay. I am quite interested in hearing this. So tell us when you're ready, and we'll definitely have to listen to this. Sounds good.
Well, yes. But go ahead,
Alex. Are you in the trades? Are you in the EU?
I'm out of EU now. I got out. Like you can see, I'll show you my screen, and you can see how much I got chopped out today. I was going absolute. First I was long, then I went short, then I went long again. It was a real big dog's dinner because I was on the lower time frames. And I was just getting signal after signal after signal. So here I was long after the open of the market, got out, got short, had this push down, and then obviously got busy, came back up. You know, real big dogs dinner. I told you, when markets get a little bit choppy, I chop myself up because I'm quite aggressive, and I like to have very I get into, you know, when it's directional, I like to get in, I like to be aggressive. So I chopped myself up quite here. Finally, and this is silly actually, because this trade, after it came in, this trade with all this consolidation, you know, was kept, you know, kept as support of this 21 moving average. Normally I would not close this position early, but for some reason today, because I've probably taken so many of those losses, and I did lose a good 2 hour at this point. I was just, something in me was just like, nah, you just close it early before you take the full loss. And then, you know, and then I actually started to see it, you know, holding and then pushing up. Normally, so I don't know what happened to me with my psychological aspects today, but then, you know, then I got in a decent place. Break of the above here, got in on the candle that broke above, got in on this candle. I was thinking there was going to be probably a retest before onto the top of this range, but you can see it did have that retest. It broke up here and it had that retest right there of that level, and then started pushing off. So I got in straight away, and then I took it off to the 15 EMA. Because the 15 EMA, that was the idea at the start of the day. After I saw the price push down on the open and then came right back up, I was like, okay, I'm projecting that this is going to hit the 15 EMA, and then maybe we'll see a push down. But I'm done for the day.
It's funny, you know,
after all of those trades, I'm done for the day.
No, I'm watching. You know, I'm watching the red and the blue arrows there, and like I can feel the frustration. You know, I can watch it, and I'm like, I know that feeling. Like that price action and those orders is like, yeah, I it's almost like I can feel the price action right there, and it's just frustration. And like
it's really because I was also stops were quite close. Didn't give the trade really time to breathe. And just that's just the way it is. But these trades that we had on Thursday, I remember talking to you, Jonathan. We were talking together.
Wow.
Got into a really nice position here, and I was thinking it was going to break and break up the top of these highs. To be honest, I didn't think that it was going to break down. So I got into this position here. Added the position, got out of the smaller position, and was riding all of this up here. I kept on adding when I was looking to get up, and I still made money on this overall position. I made about 2R on this overall position, but some of these losses here were I was marrying a little bit of a bias too much. I had a bit of tunnel vision of, okay, it's found support, and now we're going to break up the tops. You know, break, retest, push, and break the top. So, you know, some interesting trading over the last week, but still gotten some really good positions. It's just about some of the trade management and perfecting on adding to positions at better times. There was a good ad here that I made some money on. But there's some points where I add a little bit prematurely, and sometimes I gotta learn to kind of.
I mean, I gotta say that
slowly, I'm getting better at adding to positions.
Dude, I gotta say that trade from Thursday was just absolutely fantastic. That was such a picture perfect right there. And by the way, guys, I don't know if you can see, but if you see up here where it says right here.
The MET indicator.
The MET indicator.
Yeah.
There it is. That's the MET indicator. And what you can see here on the MET indicator is that MET support is right here and MET resistance is right here. So basically, this is a MET to MET trade. But yeah, I mean, the trade here was just beautiful. We had, you put the fib on here. You see that we had such a beautiful retest here. We got a hit of the 50% fib, and then if you go out to the 4 hour, you will see that the where is it? Yeah, so right here you see you have the 20 and 50 ME, which is the 20 and 50 EMA right here. So you got the 4-hour 20 and 50 EMA right on the 50% fib. And I remember Alex saying like, messaging me like, oh, you get a long on, you just mentioned me like long on EU. Like, yeah, let's go long. And that's it, you know? And it's such a beautiful, like picture perfect trade. Look at price coming up here, you know, going along from the high time frame 50 up to that 618 right here of that short Arl said complemented with these fibs right here. It's a picture perfect. And that was like a quick 4-hour trade.
It was great because it was literally we were texting each other in the morning, long EU, getting in it. It was going straight up, like it was not slowing down. And I was like, you know, when you got moves that fast, normally sometimes fast moves the wrong move, but I was like, fast move's the best move. You know, this is the best move ever. And I thought it was. I didn't think it was going to break the higher high and continue on, but it didn't. But we still made money, so that's the main thing.
Yeah, what's crazy is like we you know the crazy thing like we
go ahead.
Yeah. No, Victor, go ahead.
I said the best moves is when the market is going in your favor. Those are the best.
Oh yeah, definitely. Easy peasy.
Blue. What's going on with this? What's going on with the color on this camera today?
Yeah, man.
Maybe I can show my. I got a few signals today. Maybe I can show that they're a beauty. They're a beauty to look at. The way I trade, it's all right. So this is I got a signal today on GU and a couple of EUs as well. Those on EUs did not work. So I think when you were getting chopped up, Alex, I was trying to get a short and I didn't get anything, but. This GU did work marvelously. I'll show you guys. This is how I started the day. So at the beginning of London, and I saw this is the this candle. Let me make it wider. Hold on. Let me mark it with. This is the candle that started like 1 hour before I started. Trading 1 hour, an hour and a half, right? So I already had this engulfing, and in my way of looking at the charts, this is my fresh order block, that H4. So I'm looking when I got fresh H4. That's my signal to start looking for the lower time frames to catch something, to see if there's something. Of course, I knew that we do have like this support area, this supply area. So I'm looking. I know that this could continue today, like follow through from Friday, but you have on both sides. You have that H4 on both sides that could be pushing the market. So I'm looking on both sides to get in, short and long. But let's look at the long first. I got the H4 fresh. I then go down to the H2. And this is my time is GMT +1. So this is GMT plus, this is 7 o'clock London time. That's when I start trading. And in that candle, I identified you got that fresh H2 that was sitting below, and price came. When it started, it hadn't, of course, this wick was formed. Price got here during this 2-hour period. But at the beginning, it hadn't reached that yet. So at that time, it wasn't reached. And on the H1, you have the same area that is also left a fresh order block, right? But since it has many bars, to me, that wasn't fresh yet. But I had the H4 and the H2. That's enough for me to go on a hunt. So this is what I have. I did what I always do. I had my quasi short for Quasimodo structure put in, right? That's the head, that's the left shoulder, and that's the move out. And I'm waiting for price to come back to my areas, to that H2 to get my entry long. So, and let's look at that on the lower time frames. And this is as beautiful as it gets. This is you got on the 5 minute, you have one entry order block. that did not signal, but you could have entered. You could see how the market comes from that high point, comes all the way down there and reacts to that 5-minute order block, right? But it was on the 3 that I got my entries. You can see how the market comes. This is the H2, right? So like this, the bigger order block is the H4, and this is the H2, the refinement of that supply or that demand zone. And how the price comes back in. I got one entry here. That one got stopped out, right? When it came back the second time. But on the second time, price comes precisely. You can see how price reacts to those entry order blocks. I mean, how beautiful is that? Look at this wick and look at that, the other one. And that's I got stopped out on the first one. It's on the second one that I got my entry. And of course, I am still holding because my targets are based on the daily range, right? And if I already know that this is where can price go to if you're on the H4, you got this supply zone, and after this, you don't have anything to the left until you get to this area, this order block here. So, and if you look for other reasons for price to stop, this is you got a couple of confluences here. You got the H4, of course, you have a pivot there, and you have a couple of other order blocks. They're all sitting in here. You do have this one, but based on the ATR, I would expect price to reach a little bit higher, and that's where my TP is right now. So that is what I caught, and you can, if I put it in, you can see, I think my entry was, let me see my exact entry. Entry was around here, somewhere here, with my stop below that entry order block, and this is the trade.
Wow. So are you saying you're up like 7R?
Yes.
Good.
Something
Nice.
a little, yeah, something like this. Something around this area. That's the trade that I caught today. But this is on the GU that is in profit. I did lose a couple of entries though, because if you look at the H4, you did have the same thing on GU. You had setups for the long and the short, and I got a few entries here. Look, this is the order block. I'm on EU right now, right? So this is the order block that would make me look for a long entry, a long setup. But I also have this order block, the same supply zone that I should be looking for a short there as well for this move, right? It forms the order block, and I wait for it to come back, right? It forms it before, and wait for it to come back for that continuation, right? So I was looking at both direction. I did not get an entry long on EU, but I did get a couple of entries in here, and of course they didn't work. This is one order block, and I was in here when price was and these pins I was catching. I have having entries to go short. As we know, that didn't work, so I did get a couple of losses in here. This is the area that I was shorting, thinking, okay, this could be the last moment where it.
That's where I was shorting as well.
Exactly. That's why I'm showing it too, because it makes a lot of sense to me. My entry was one of my entry was this. Hold on, it's a short entry, so it's this one and something like this. And I was going for this, either the whole range, and perhaps I would have been able to keep something open for a longer target, or further away target. But that didn't work. So as soon as that level wasn't respected, I stopped trying and I left the GU open, because to me this can go somewhat longer, somewhat further down in price.
So looking at GU there, what would be, so you're currently long, and what would be like your final, where's your final target for this? Is that
Well,
that setup we're watching?
Yes, it is. This is my target because, well, the thing is, what do I have when I am in a trade? I ask myself, what is it that I actually trading? What's the idea behind? What's the signal I have, right? Because I look at all the possible time frames, and if I take this off, that's invalidated by now already. What do I have? I have an entry here in H4, right? But that's on the daily. I don't have anything, so I can't keep this overnight. I don't have a reason to keep this overnight yet. That's why I try to keep to take everything off by today, and I'm gonna hold that only for a couple of hours until the end of the session. I do have a setup on the daily, which is this setup. Look, we are on the daily time frame, and I do have this, right? I do have this. There we go. That's the structure. You could use this, right? This would be then. You can even use this one, right? You have lower highs and lower lows, and that's enough for me to look for the quasi. And then price moves out, right? That forms the quasi, and I'm waiting for price to come back beyond the 50% retracement to catch my entry. And this setup hasn't signaled yet because this would be my entry order block, right? And based on this, I would be targeting this high or something, perhaps this, something like this. I would be targeting the whole structure, right? Let me hold that. That's a TP, a macro TP. There we go. This would be my target. But this setup, which is a daily setup, has not triggered yet. So for it to trigger, it needs to close as an engulfing or an outside bar. So I cannot use that target. I need to be, be patient and only, have targets that make sense that are based on setups. And this setup has not signaled yet. So I'm not going to hold this, hoping that it will signal tonight. So I'm gonna just stick what I got, which is on the intraday, and I'll wait for tomorrow and see if I get a signal tonight at the end of the day. And if I do, then I would be trying to catch the bigger move, right? The swing trade kind of move, something like this. But the thing is, I don't want to trade something that's not there yet. I don't want to, imagine that signal, that the signal isn't there, so I cannot trade it. So that's why I'm only gonna keep my my intraday trade on, and that's it. I'm not gonna upgrade this to a swing trade yet.
All right. So you're basically the reason why you're not having that high target is because the swing traders haven't activated yet with the close of daily candle, right?
Exactly. And
right.
The thing is, sometimes my intraday target is so far away, or maybe I have a bigger intermediate structure that I can have a target, like maybe not a swing trade, but maybe just a little bit further away, and that gives me enough time that the daily might trigger mid trade, if you understand what I mean. And if that's the case, then I can upgrade it. But in this case, I don't see how this would signal on the daily before it hits my target. So I'm just gonna take my target.
Yeah, for Michael asking about the backtest and template, I've just shared it in the chat. So when you exit it, just make sure you make a copy of it, because otherwise I'm gonna get emailed, and I'm already getting like 10 emails every day. So make a copy. That's very interesting. I think right now for some reason we're basically in the same trade. It's very very similar trade. I guess you have much tighter stop loss than me. So I mean, if I would be able to take profit up here for 7R, then I would do that. I would do that right away. But now I'm at 2.6, and I do, like, my whole idea here is to try to transform a low time frame entry into a swing trade. And actually, when I'm looking at the daily, I'm just thinking that I still think that there's a possibility that the trend we looked at here is still alive. I'm basically looking at this trend, because the fact that we did not break these lows tells me that it's still alive, even though we had a big move to the downside. It's not looking as good, but I still believe in this move right here. Now, I would probably be a little bit too greedy, saying, you know, I wanted to run all the way up here, but I think it's a fairly big chance that we're going to see a push up into, you know, this area up here as well for this move. But obviously but then again, like I'm looking at this and I'm thinking this is going to take a while, but it only took us 2 days to go from this level down to that level. So, you know, it's possible that we'll see that push up.
Yeah, on EU, you have a similar structure as in GU as well. I do have a quasi also that reversal bullish pattern on the daily, and we haven't signaled yet. We don't have that engulfing or outside bar yet, but if your target is a bit further away and you get that signal tonight and you're still holding, then I could be targeting the whole structure, which is the top of the last swing high, like the swing high of the 8th of March, right? Or depending on how price action is, you could be targeting that daily order block that was left behind at 927. That could be a target. That could be a very nice target. If price action isn't like, you know, the order flow isn't as obvious as it should be. Sometimes it goes ranging, and then you don't want to be sitting on something that could be coming down back.
You know, the way I'm seeing is right now is, you know, we had bad this general area is like the first trouble area, and then we have, and I kind of view this as the whole area, something like that. And I think above this we have this level, and then above that we have perhaps this level, and then above that we have this level. So I'm thinking, you know, I'm just gonna put one TP at every level, and then I'm gonna have like I have stops at entry now, and I'm gonna keep my stops at entry, and then you know, have probably just exit, just partially exit this position to the upside, because I know, like I did just read when we had our break. I read a tweet from Tom Dante, Trader Dante, and it was a comment to someone else writing about how he analyzed different traders' journals, and he saw that by entering, like by exiting a trade early at a good level, and kind of like micromanaging the trade, he saw that trader gave away 7R as compared to just putting levels in, TPs and stop loss, and then just leaving that trade. And I think one big thing that I've done in my trading is, you know, I'm just going to TP here, you know, I'm just going to TP there. Now, in this case, 2.5R is not too bad. I think right now I'm going to go in and see what my win rate is on the account I'm trading. I'm trading this on this 5K evaluation account. For this month, I believe I'm up 4 hours, so halfway till target, and my win rate is currently 41.5%. So with a win rate of 41.5%, having trades that are, you know, 2.5R is still quite good. But if I'm able to have a trade that, you know, goes all the way up here, then my average exit for this one would be around 4 or 5, which I mean, in this case, this would mean that I reached that 10% profit target in just this trade. So I think, what I need to do is I need to kind of let go of the idea of exiting fully at the FTA and kind of let it run.
I think your data will tell you that, because
Yeah,
it depends on your targets and your stops. Because if you have tight stops like I have, you need to be very selective as to what trades you leave open, because since my stops are so tight, if I leave them open, I have a big risk of price just coming back, take me out before it continues. And so that's why I don't put it
That's
on
what you get on
breaking.
the lower time frames.
Yeah, that's why I don't put my trades on break even when I'm in the trade. I know it can be a good
I did the exact
practice.
same.
You do the same thing? You don't?
Yeah, I don't touch my my stop losses. Every time I've played with trying to see if I can make my edge a little bit better by trailing stops. The exact thing that you just talked about happens a lot, and it's just not worth it. So that's why I just don't touch. I set and forget. And if I need to close a little bit earlier because I think maybe price is got to an area where it's going to find a difficulty breaking, then I'll close. But I don't really move or trail stops for that exact reason.
I have a good example of that. I mean, I looked at the I believe maybe the 15-minute on this trade right here, and I placed my stops here. I looked at the 15-minute, and like, well, I'm gonna place my stops here. It's now in profit, and I'm like, that feels good. The free trade, whatever happens here, I'm gonna make money, and that felt good. And then I realized I'm moving my stops based on like my emotions. Like I'm moving my stop because I want to feel good about it, And then I go out to the 4-hour and like, this makes no sense. I'm placing the stop loss right in the middle of a move, right in the middle of a move. So what I did then was like at least have it down at entry below that 4-hour candle, I can't have it right here. That makes no sense. But if I have it at least before, below that 4-hour candle, and honestly, having it down here is of course much better. But I think price has moved quite far further up, so I can have it at entry, because if you look at the 1 hour, we have this level right here where I'm expecting a bounce, and if it doesn't bounce here, I'm okay with getting stopped out, But I would absolutely not be okay with being stopped out here.
Whether you move your trade once you're in profit to break even or not, I think may not be a universal rule for everyone. For some people, it might be what they need. But I think you need to base whether you should apply that or not based on your data. You should have enough data, enough trades, a big enough sample size of at least a couple of hundreds, if possible, of trades. And then you can go and see if you have a consistent entry criteria, a strict rule when to enter, where to put your stop, all those objective rules in place. Then you can go and see, okay, what if I did move my stop to break even? And your data will answer if it's better, if it doesn't make a difference, or if it's worse. And that you should follow your data, because I can tell you what works for me, but since you're not trading my system, it may or may not work for you as well. So it's kind of personal depending on your trading style.
Yeah, you're absolutely right. I mean, what it all comes down to is basically what you've tested and what those testing results have told you. And like I said, you need a couple of hundreds of trades to really get good numbers, good statistics. And I haven't, like, the way I'm trading now is and Alex might have seen like the difference, when I started, purely swing trading, very simple, like a very systematic way of trading, and then I kind of tried scalping, and now all of a sudden I'm like on all time frames, and this is, I believe, like what I'm and what I'm doing now is just completely I gotta bring this comment up. Uninstall MT5 after entering a position is actually a very good idea. put your stop loss and profit, and then just uninstall MT5, throw that phone in the river, and well, maybe not throw the phone in the river, depending on how many phones you have. Probably only have one, so don't do that. But uninstall the MetaTrader 5 is a good idea. Yeah. So anyway, so the way I'm trading now is strictly like almost 100% discretionary, and for me to find to build up. This is difficult for me to backtest. To build up data on this is quite difficult. But when I did backtest my system and I had a lot of data on that, I actually went through. What I did was my idea was based on getting in on a bounce as a swing trade and then taking profits when that move has reached a new high. And I saw that a lot of my trades actually never reached a new high. It got rejected at the FTA. So I went back and looked at like 200 trades or something like that, and I saw that it was more profitable for me to exit fully at TP1, and to let the trades run would not be as profitable.
Exactly.
So
exactly.
And but now the way I'm trading now is. It's different, because now I'm able to get in at the level where you actually might have a huge reversal.
I think the only thing that I would add to that, and I don't want to put anything in, I never want to put anything in your mind, because you've got to you're going through, because changing from swing trading into day trading is quite a big step, and it takes somebody time as well just to get used to it. But when you are on those lower time frames, price can change very quickly, and it may look like the best trade in the world, and I'm like it as well. Sometimes I get quite greedy with my price targets and I try to push them as much as possible. Sometimes that where you say you want to get out first is sometimes the best place to get out, and only in the small times, like let's say that trade on Thursday, that area where it turned, I looked at that area, I was like, that's a place where I'm going to find some trouble. That's a good place to actually close out. But out of my greed, there you go, you can see it right on your screen. I looked at that and I was like, that is exactly the place where I'm going to find trouble. And that's why when it came down, it rejected off that. I got into another position because I said, it's only going to reject that area and it's going to continue up. And I was, he's done that out of my greed, but that's where, when you're first coming into the charts and you're like, okay, that's going to be a great entry, and I know that's going to be a great place to get out. Normally that's the cleanest, your cleanest decision throughout the day, because slowly, the more that you're making your decisions, the less effective sometimes your decisions are. Normally when you come into the charts, you open up your screen and then, I can see a trade right there. It's simple, like in your face. And that's why I say, especially if you're on the low time frames, sometimes it is getting in and getting out, because price can change its trajectory very fast.
But I think it's also about, I absolutely understand what you're saying, and I would say but you know what, like I feel good about the fact that I have not closed, and what I did was I closed 50% here. Okay, nice. So I'm already out 50%, and I feel, I'm proud in a sense that I'm still in the trade, because that's patience right there. Like that's
different from what you were trading like 2 months ago, man. So fair play.
Exactly. So what I'm doing now is like I'm working on that. Like I'm taking the patience from swing trading into day trading, and also it has to do with the structure of the overall move that I'm trading. Look at this. This is just picture perfect. You have call this as distribution range, accumulation range, and this is just picture perfect. You got this downtrend right here, comes into the range, and then you have like you're forming a rounded bottom, and you're kind of like breaking out here. Now when I see something like this, I'm gonna look at like the 0.618 level of this move, which is if we add the fibs, you'll see that from that high down to this level, the 0.618 is going to be right here, confluent with that level. So when I see something like this, I want to see like this this trend breaking and kind of continuing higher. But if I saw something like this, let me give an example of what it could have looked like. It could have looked like this, you know, and this, then absolutely 100% I would take profit here, you know.
Okay.
But right now I feel like it's just this move kind of tells me something that we want to move higher. And then at the same time, what then you have on the, this is, however, something that kind of goes against that idea, because this level on the 4 hour is just such an obvious level. So I kind of get what you're saying again, but I'm kind of watching this move, because this move, what I think is just, this seems like a complete overreaction to a news event. I believe that was, I think that move was the FOMC, right? At that bullish move. And then the last 2 daily candles, to me, makes very little sense. It's just, that just seems like an overreaction to something. And we're kind of going to, you know, start moving higher again.
Well, if you go, that's EU, right? If we look at that, if you could show my screen, I'll tell you from my perspective what I see there. What I see is this. We have, let me get the structure, right? I showed that we do have a quasi, right? A reversal pattern on the daily, right? This is, I'm gonna do it again. That's this.
By the way, we have major news events for USD in a couple of seconds.
Oh, really? Today?
Yeah,
5 seconds.
Yeah, I think we have consumer sentiment, right? Don't we have it?
No.
Let me take a look.
I checked this morning. I swear there is no news today.
It's on my FX.
No, we got consumer confidence coming out in right now. So now.
Oh.
Let's see.
Don't know how
that might be
that.
the.
Let's see what happens now.
Yeah. All right, go ahead, Victor.
It's new home sales, right? Yeah. We have this structure, right? We have this on the daily. We do have a quasi, right? I think I showed that earlier today, and the movement that you said you don't understand, those 2 candles going straight down after FOMC. To me, I look at it without, you know, thinking it was news or it wasn't. But from my point of view, based in terms of order blocks, what I see is that we have this entry order block on the daily quasi that I just showed, and price came in right here, right? Came in for a few pips into that area. We were talking about this when this happened. Yeah, and it had the first reaction, and it signaled when it formed this bigger order block, this fresh order block. So it signaled a daily signal to go long. But price doesn't go in a straight line. Even after a signal, it doesn't mean you can get in and it's going to go straight to the moon, right? It's going to come back and either test this newly formed order block as a mitigation, right? This is the new one that was just formed after it touched this entry order block. That it either is going to come back and interact with this order block, or it's going to come back and interact with this one once again, because it didn't go as deep. Remember, we talked about this, and I said I don't know if everything is going to penetrate this order block before it continues, right? And it did move up, and I thought at that moment you're thinking, okay, that was it. It's not going to come back. But this order block is still valid. This area is still a supply zone, and it makes sense in terms of order block that it comes back and penetrates this a bit more deeper, and we will find out today if it closes as an engulfing, or in the coming days if it forms an engulfing, let's say a day or 2 or 3 days, and while it's still in this order block, while it's still in this area. If it is, to me, then that fits with that daily quasi that I'm saying, because price comes back and this is a potential area, and if it's not this one, it's the one below, but one of them too could be the potential area of the reversal. And this move down here makes sense to me. That's the market retesting this, before it shoots out for that target, which is the swing high of the whole structure, which is at 109.80, more or less 82. So I will have to wait and see. Go ahead.
Yeah, I mean, I like the idea that you say like it makes sense because you got your TA going and you got that order block and everything. I think what makes this problematic for me is the fact that when we that first test of the upper part of that order block, the 2 wicks at the very top right there, when we had that bounce, that was like my confirmation that all right, now we're starting an uptrend. But then all of a sudden, boom, we came down and we broke those lows, and at that point, it's the whole price structure and everything just becomes confusing. I think that so I think I had to look at maybe, because like the idea here with the order blocks here kind of makes sense. I kind of start to because I remember a time when I actually did use order blocks, and I liked when order blocks were like in confluent with the reload zone. But when you have equal lows, it's impossible to have any good fib retracement, because then with equal lows, it's just the where you begin the fib. So you can't really be trading based on fib when you have equal lows, if you know what I'm saying.
I understand that. Yeah, I understand that.
Yeah.
Well, what can I say?
Yeah.
What can I say? I think we can be both right. The only thing is, and that holds for every system. No system will be right all the time. So you can be right at the same time.
I actually got to correct you there. I'm sorry, Victor, but the MES system works.
Yeah, the MES system actually works. Yeah,
that actually works. We've tested it. It's got 100% win rate right now.
Yeah, it does. It's amazing. I'm not sure I'm ready to give away the secrets, but it's coming.
Do you wanna go through some crypto and just see what we're looking at?
Yeah, sure, we can do that. I got the May right on here. Let's take a look at what May has to say about Bitcoin. Well, okay, so I actually have something. I'm just going to remove everything here. No, I'm going to keep the indicator on. So looking at the 4-hour here, we have. So yeah, I took this short on Friday, right? So on Friday, I took another short on Bitcoin right here. Some good profits on this one. It was insanely high leverage on this one. I think I had like 75 times leverage on this one. And I risked more than I should have had. So I made some good money on that one, took some profits down here, and then I moved stops to entry, got stopped out, but still I believe I've closed like 50%. So made some money on that. Immediately took that money and put it into VeChain right here. And it's a good one. So I believe I got in, added to my position here on VeChain. Anyway, let's go. Let's take a look at like an overlook here on Bitcoin. So let me kind of give you my overall ideas on Bitcoin here for those of you who haven't seen that or heard that. We basically have 3 levels of interest. So the first level of interest is the daily 20 EMA, and then we have the daily 50 EMA, and then we have the weekly 20 EMA. And the fact that I look at the daily 20 EMA is just the fact that the 20 EMA is just, or the 21. Some people like to use the 21, or the 20. I used to use the 20 because honestly, I think it looks better with even numbers. It's the same basically. 20 and 21, very small difference. But yeah, so whenever Bitcoin is above the 20 exponential moving average in an uptrend, that's obviously a sign of strength, and that goes for all markets basically. So we lost the daily 20 EMA. We started losing it here. So we had a retest of it. We lost it here, and then kind of tried to reclaim it on Friday, and then started trading below again during the weekend. And I remember saying that the first sign of strength for Bitcoin to continue higher is a reclaim of the daily 20 EMA. But really what we need to see is a reclaim of the 69K region, which is right here, because that would signal like a perfect, almost perfect bullish break in market structure here with, breaking these highs, get a higher low, it might break out here and then perhaps retest. It's probably not going to retest because when Bitcoin breaks an important level to the upside, you very rarely have a retest unless you have a move like this, just to take out all the longs and all the shorts in basically one move. But yeah, that's what I'm watching for Bitcoin to regain its strength. And if we reclaim 69K, I'm probably going to take a long trade on this all the way up to the 100K region up here. So that probably going to look something like this. Let's see.
What are you targeting?
100K. What do you mean, like more than just? Well, it's just price. I'm just talking 100K. But I also have. I believe it's. I don't think that's the low. Let's see. We're gonna go to.
You'd have to go on to Bitmex.
Bitstamp.
Bitfinex or Bits. Yeah.
I use Bitstamp. So you see the chart here. So up here, right under the minus 0.618 is the 100K region, and that's going to be my target for that move. Now this is the bullish scenario. Now there is, of course, the possibility that we just have a ranging market here, and we're just trading within this range, and we're going to can move like this, right? Yeah, that would be great. But we could also break down, and if we break this range, if you will, if this turns into be a range, which it's basically right now it is a range, but it's not very obvious. If it becomes obvious, we should be looking at the daily 50 EMA, which is right here, as our next level of support, which is around the 60K region. And if that level does not hold, we have a like really, really good looking level right here. I think 100. Well, I'm gonna show you my real exit. Like what the 100K target would be for this trade, and this would be like this would be like a 4 or 5 hour trade, and I would probably trade this on like 100 times leverage, a high leverage
Everything
trade.
you are saying right now just sounds so degenerate, bro. I've got to say, you're going for 100K Bitcoin on 100 times leverage. Only the real ones would understand.
Well, yeah, that's that's also because I'm one part of risk management in the world of crypto is that I know maybe people in Forex doesn't understand is that if you have money with a regulated Forex broker, you're not really running the risk of losing all your money. But in the world of crypto, it's a big risk, right? You guys remember FTX and like you might think Binance is super safe. You might think Bybit is super safe. Well, everyone thought that, or Bitcoin is about to break out, but I guess I couldn't alert here. So everyone thought that FTX was just as safe as Binance and Bybit, probably safer than both of them combined. Everyone who had money on FTX lost it all. So the way I'm trading crypto is so if I put in 1K USD in the cryptocurrency exchange, and I'm able to trade that with 10 times leverage, I'm viewing it as I have a cold wallet with 10K. I'm taking 10% out of that capital, moving it to a crypto exchange, using 10 times leverage. So I'm now trading with the same amount as I have in capital. So if I lose that whole account, I'll lose 10% of my whole trading capital. So it's a different way of using trade management, because I'm also taking into consideration the fact that the trading exchange I'm trading on might not exist tomorrow with my actual money. That's why I'm using that high leverage. So small position sizes in USD, but high leverage to increase the buying power of that position. Now, anyway, what I like about this, and I do think right now it kind of looks like Bitcoin is going to reclaim that level, but if it doesn't, the longer price stays up here, the longer price range for Bitcoin, the better for altcoins. And the higher altcoins goes, if Bitcoin breaks down to that weekly 20 EMA, then I might not run the risk of getting stopped out on these long-term positions. So you see, I get a trade on Cardano. Stop loss is 32% below entry. If Bitcoin drops down to the weekly 20 EMA, I run the risk of getting stopped out on this. But if Bitcoin continues to range for, I don't know, 2 weeks more, maybe Cardano is going to be up here. And it's going to be harder for that to come down and hit my stop loss. I hope that Bitcoin can either break out and continue higher and take altcoins with it, or go sideways for a couple of days or maybe even a week or two. That would be fantastic. And then these altcoins that I have very good positions on, like especially sand here, like we mentioned. And the risk to reward on these are just insane. I mean, this is a 11R trade, and it looks very, I mean, if you look at, if you come from the Forex market and you're looking at this and saying like, oh, this is a 350% move, it's a 11R trade, but this is normal in altcoin trading. It's quite normal. And you look at VeChain, this is 8R, and then I have Phil, which is 28R. Yes, it's a very, very tight stop loss, but if this can just break this, if you can break this high on the daily, I mean, having a 30R trade in the altcoin market is, I mean, it's going to happen in this bull market. It's just all about putting your money in many different altcoins. I mean, that sounds so stupid, but divide your portfolio up into many different altcoins, and one of them will most likely explode. And you only need one of those trades to pay for all the other altcoins in your portfolio.
For that strategy or approach to work, you would have to have an estimation of how many X that one will do when it explodes, and how many do you think will explode, because that should be the limit of the number of bets you put on. Let's say you think there is one that will do 30x, right? But that means that you should not have more than 30 positions, because if you have, then you will not be profitable. You understand what I mean?
Yeah.
It depends on the estimation
definitely.
you have on how much you expect to gain when it does explode, and how many do you think will explode. Will it be one? Will it be two? Because if you do too many, let's say you do 200 altcoins, and one goes to 50x, and the other ones you lose, then you're not breaking even. You're not. So it depends on the expectations you have. What's the expectation you have on altcoin?
I just need to comment this comment. Some people said that same thing 4 years ago. Yeah, look at this. 4 years ago, those people, well, you would have been up 13,000% on Solana if you did follow those people saying the same thing 4 years ago. So guys, this is, I mean, the crypto market is insane. And if you look at Solana right here, this is what we're looking for. This is what
position on Solana, one of the times that I added was at 17 pounds. That's like
crazy.
700%.
Yeah,
and I'm still in that. I mean, I'm still in that spot position actually.
Yeah, I mean, this is basically what we're looking at. So when you're looking at Cardano, and so you're looking at Cardano, you're like, well, this is never going to move like that. It's never going to move 200%. This is absolutely insane. Well, look at Sol. It did that, and Sol is one of the first movers in the crypto market. Look at that. This is crazy. It moved like from the breakout of this trade to current prices at 300%. Why would not some of these altcoins follow? All right, because they look exactly the same. We could add Sol to this one right here, and you would see that, okay, you see, right now we are getting in. So this is the orange line is Sol, and then we get Algo here. So we can go to maybe, I don't know, like whatever, we get Cardano, right?
Yeah, you can have a look at FTM, that's already started.
Yeah, and exactly, FTM is going to show the same trajectory. It's just going to show. Yeah, look at that.
If you go on a log chart, sorry, just to interrupt. So take off Sol for a second. Now look at that as a log chart. So you've had a break retest, a W formation, and now it's breaking up. Tell me, and that's on a log chart as well. So you've seen all of the history of the price action. If that isn't screaming to you now, if you saw that on a 15-minute chart, you'd be aiming to take over the highs.
You're absolutely right.
What's the difference of what's the difference trying to take the highs on a weekly than if you're trying to take the highs on a 15-minute?
Yeah, I mean, the only difference is that time is not on your side when it comes to the macroeconomics and stuff like that. But I mean, this is like, I've been trading crypto since 2017. I've already traded these moves. I've in the summer of 2017 summer of 2017 and 21 we all traded these moves. It's nothing new. It's just the fact that they come along every second or third year, or maybe even fourth year. It's just a cycle, and that's why when the market moves like this, it's time to increase your bet, basically.
Crypto is a little bit like equity trading. When you've got a stock that is hot and it just goes above and beyond what people think, and a lot of people, because you've got a lot of crypto futures and you've got a lot of leverage positions, when those leverage positions unwind or they get caught off on the wrong side, it causes cascades and it causes momentum like you've never seen before. So all of those things added into the things with liquidity coming in from more retail, and the liquidity coming in from things like BlackRock and ETFs and things like that. I could see this being an interesting run up, and I'm betting everything that it's going to be and I say this with the biggest disclaimer on the bottom. I held some of the most positions that you just look at it and you're like, you know what, I'm risking pretty much everything just to know if this goes to zero, it's gone to zero. But I held all of that, and so
in 17 I literally, not literally, but probably very close to getting going all in on something called Dragon Chains. You had an altcoin called Dragon Chain. If you're like a crypto OG, you know what I'm talking about. Like, Dragon Chain was the big thing. I think it was involved with Disney, and it was like the next big thing. I was Dragon Chain. Let me see if I can even find. Oh, really? Have they delisted everything? So this is Dragon Chain. Let's take a look. Dragon Chain versus Tether.
See, now that's why people don't like crypto. exactly the reason why.
This is, I basically went all in on this. So this was an ICO. So I bought quite a lot in the ICO. I think, I bought a huge amount of Dragon in the ICO, and it got listed. So it got listed on, this is Gate.io, but it got listed around this price, right? Or maybe it got listed here, but it pumped up to like 53, and then, even all the way down here, we were down 96%. And I remember holding this, and then in 2018, and so we're down, like at this point, we're down 98.9%. And I remember watching my portfolio and seeing Dragon Chain. All of a sudden, we saw Dragon Chain being up, 158%. And I'm like, holy shit, it's up 158%. But then I remember I'm still down 97%. And now it's down, basically 99.9%. So this was one of the biggest products in crypto. Like, this was basically the future. And so this is nice.
You're not selling. You're not selling the point that we're going to 100K right now.
So I mean, this is the problem with crypto. And another product I used checked now. Like, I don't want to mention the name because I'm still still invested, and I still have things being released. So I was one of the first investor in it, and it had a vesting period, right? So I'm getting coins on a monthly basis, and that was a gaming. Yeah, I'm still holding Dragon Chain, of course, because this, it's just gonna explode any moment. So that product just it's down like 99% now, and I still have coins coming into my portfolio, and they gave up. Like that was the future of gaming. So you had one guy who worked with Atari back in the day, created a Altcoin product. Like, it was insane, the biggest thing. And I invested, I believe, a big, several monthly salaries into that project, right? Very promising. And they launched. 1 month later, everyone just gave up, just gave up. And that's just the state of crypto, honestly.
AKA rug pull.
Yeah.
Well,
Victor,
I'm a Forex trader, and I'm a Forex trader, and I'm a bit hesitant to trade crypto because
Good.
You
shouldn't.
I've always, well, not always, but I know you have a lot of opportunity and big swings, and as a trader,
Not
that's
really.
what you want, right? You don't?
Jonathan, shut up, man. Let him talk. Let him talk.
But
I'm sorry, man.
no problem. There are, of course, as a trader, these kind of moves you can exploit, right? You can apply the same rules you apply to any other assets, and you can get edge on it, get alpha. But the problem I have with, and I always had, and I still have a little bit of reservation on it, is that crypto as looking. Considering crypto as a storage of value, I have an issue with that because I'm not too. Bitcoin. I can see it's the leader. It's the the biggest one, and I can see that. That's why I have some investment in Bitcoin as well. But on the altcoins, I don't see the store of value, and if I don't, then I don't want to hold it. I only want to trade it, if anything. Trade just what I see, but be like a day trader or maybe a very quick swing trader, because I don't trust it enough. Maybe it's because of my not knowing enough about it, my ignorance, but that can be. But that's the thing I have. Then I stayed away from crypto. But from what I see, what you're showing, those big movements, I can already see myself, catching a wave and stepping on the gas and leveraging positions. I can totally see myself doing it, because at the end, as a trader, you're not an investor. You're not as a trader. I'm not there to hold the position endlessly. I'm just there to just get in at a good spot and get out at where I can get profit more than I lose on the process. So I can see myself doing it.
Yeah, but half of these coins right here, nobody knows what they do. Cardano, ADA, it's been around for ages, and people love this. There's a cult around this one, and it does nothing. It doesn't even have a project. It doesn't have anything. It's just vaporware.
It's got a network. It's
really, does it? But what does it do though? It does nothing. What good does Cardano do for?
Like everything, it just makes
Alex, I'm trying. I have a point here. I'm trying to get a point across here.
No, I'm just saying it's like everything that Why do we trade CFDs? CFDs is we speculate on direction, and the thing that brought me to crypto. Maybe there is no store of value, but the only person that says there's a store of value is the next person who's going to buy it. So when I know that with past price action and everything that's going on, I'm speculating that people are going to feel the same way about trying to make money on an asset that blew up so fast in prior years. I'm betting on a person's emotion, and that's what I'm betting on. I look at the price and I look, okay, price and technicals and stuff help me gauge a better place where I can position myself, but I'm betting on other people trying to get rich, like I'm trying to get rich off this as well. I've just got into it a little bit earlier because I've learned from my mistakes.
Now I got a question for you, Alex.
Yeah.
What you have seen, I from what I understand, you have been trading crypto for some time. And if we consider that there are many people who come in who are not traders, but who just buy crypto because it's popular, because they want to, do what others do, herd behavior. If you consider that, have you seen that TA works better, like more clearer signals, obvious moves for us as traders? Do you see more opportunity in crypto because there are more participants who do not know how to trade and do not how to approach the market? Is it easier? Is it easier
I would say levels and fibs and EMAs, just like it works on every other thing, it works just the same. Crypto, even on meme coins that have just come out within an hour, retrace back to the 50 and reject off the 50 and continue up. So, there's a lot of bots and there's a lot of algos and there's a lot of things going on. All I can say is, it respects levels, it likes fibs, and you just got to go with the sentiment. But for traders, it's a good market. Now, day trading is a little bit harder when you're in a down, a bear market. And I'll tell you why, is because a lot of interest goes out and you have lots of days where it's very rangy and very choppy. Now, if you're a range trader and you're literally selling at the top, buying at the bottom, and you're just trading that until the range breaks, then great. I used to love doing that. I used to love doing trading like that, but only really in bull markets and what we're seeing now. Now you can get into some trades and you can hold them for a lot longer because it's very directional. It trades a lot like equities. Like if you're looking at a Tesla stock or even Facebook, Facebook a couple of years ago was sitting at $48. It was absolutely crazy cheap. I can't remember what it was sitting at. And we were looking at it in office and was like, Facebook is really, really cheap. It got bought up and it hasn't, it's just gone totally parabolic back up to the top. So same kind of things. Once the fire gets burning, once people start talking about it, that's when, the momentum starts. And we still haven't found the momentum yet. We've had a little bit of momentum, but you've still got a lot of degenerate stuff about to happen. And that's, a lot of people putting in money that they haven't got, a lot of people leveraging a lot of people. And that's when we see those cascading sell-offs as well. It's because a lot of people are now leveraging long at the tops. And that's why you see this cascading sell-offs. But all of that is, again, we're just speculating on movement like we're doing on CFD. CFD has literally got nothing but tracking an underlying asset,
So would you say technical analysis works equally well, better, or worse on crypto?
I say technical analysis, basic support, resistance, and fibs works very well.
I would say you would have a trouble finding any market that doesn't respect technicals.
Yeah, maybe I don't know how options work and stuff like that, but technicals are technicals. Obviously, you don't rely just on technicals.
Yeah, I mean, I haven't found a single market that does not, trend and does not respect supply and demand dynamics. I think that's visible in basically all markets.
Yeah.
Even untradeable markets. I mean, and that's the crazy thing. You can look at charts like this one, for example. This is the BTC dominance and the altcoin. This is the BTC dominance versus the altcoin dominance chart. And even this is respecting technical analysis. And you can't even trade this. I mean, you can create synthetic almost like CFDs for this one by trading different assets that are correlated to this. But all in all, you can't trade this, but it still respects levels, which is, to me, quite fascinating.
Have you ever had a break and retest off a fib level of your equity curve?
Yeah, that's pretty cool. Man. And that's
that happened to me once. I was like, wow, I'm going to put a fib right here on my equity.
Yeah.
My trading for today's going up.
All right, guys. We're gonna end the live stream a little bit earlier today, so we'll do the giveaway. Yeah.
How many likes have we got, mate?
Let's see.
So for people that are new, we send the link out, and the link will send you to our Gleam page, our Gleam page, which is a new way that we're doing the giveaway. So you've got to enter in that way. We're going to give a secret word that you've got to enter in to the Gleam page, and then you're entered into the giveaway automatically. Now we're going to, in a couple of minutes, once everybody comes in, we're going to then pull out the people, and they will get an email sent to them. Now I can't pull out the people live on stream, because like we did the first time that we did this, we actually took out all of their information, and I basically showed live to 1,000 people where the person lived, their address, their email, and their date of birth. So we're not going to do it like that anymore, because I don't want people losing their privacy. So once I will read out the names, so people do have a little bit of transparency, but that is how it works. So we've already got, let's have a look and see how many people are already gone. Wait, nobody's entered in.
You have to type out the code.
The code, didn't you put it in the code? Where's the code that you put? So the code today is 1. Yeah. So we're going to put the code out right now. Sorry, guys.
Yeah, sorry, never put that into a banner.
You're thinking too much about that 100K Bitcoin, mate.
Yeah.
It's eroding that brain. I am long Solana. But Victor, to go back to, we were, going off on a tangent and stuff. Definitely, technicals work, but also the fundamentals of what the public are saying as well. If you're suddenly seeing, a lot of people's interest in coming and talking about, Solana, suddenly you can normally see it on the chart that normally you're coming to a high level resistance, and there you can sell.
Okay, guys, the link to the giveaway is at the it's pinned to the comments. So you go to the comments, and let's put in the code as well. We got that one. All right, there you go. That's the code. 1 mil BTC. That's right. You thought I was gonna take profit 100K. Well, that's a lie. I'm gonna be selling at 1 million.
Imagine though, like one day we look back on these streams. I'm gonna put Victor here so everybody can see it. Imagine if we look back in these streams one day when it's at like 1 million, just be like, wow, as if I sold at 100K, as if I.
I mean, this is an easy 150 hour trade right here. 150 hour, guys. What are you waiting for? What are you waiting for? This is nothing.
Obviously, guys, most of this is entertainment.
Oh yeah.
Tomorrow,
yeah,
I got a subject. I got a topic for tomorrow. We can discuss this since we're at the end of this this session almost. This is the question. What is your opinion about Pi network? Crypto. I don't know a lot about crypto. Don't answer.
I can disclose it in just scam, bro.
I probably can.
Well, we can discuss this in more detail.
Is that a project?
We'll discuss it tomorrow. But I've got a lot of.
Is it like an altcoin product? No, or is it like the Pi network, as in?
We'll go through it. But also, guys. Yeah. We have our first trader that passed the boot camp that they were got in the YouTube. So somebody that got the giveaway has actually passed their Bootcamp account, and he's going to come on stream on Wednesday. He's actually going to come. He's going to talk about it. He passed it. He passed it. Took him about a month. He started in February, which is really good. Fair play to him. I think he trades with an EA though, so he's going to talk a little bit about his EA.
All right.
We've seen a lot of selling actually. We've seen a lot of selling pressure on the Sol now. A lot of orders coming in.
Yeah, it coincides with the dollar index not breaking down.
Yeah, so we've got about 23,000, an order for 23,000 Sol at
I find technical. Listen, sorry if they're not right, but I've actually found a very good technical reason for 1 million, which is the minus 15.618 fib. At the minus 15.618, we actually have 1 million. So yeah.
We'll look back at this when it
again,
reaches
I can see that people. I can see that people are entering in. Let me just double check that the code is. Yep, the code is working. We've got a lot of entries. We've got actions 1,089 and 3,969. So, Jonathan, that actually shows, so we've got entry, like actions, so people that have gone in and clicked and done all the stuff, 1,089. So the numbers on Twitter can't be that off, to be honest.
Really?
Yeah. Otherwise, we wouldn't have that many numbers on the contest.
Maybe you're right. All right. How long do you want to wait?
How long have you got?
Well, Jonathan is being delusional today. Well, yeah, not only today, but
sometimes if you want to make those crypto Lambo gains, you gotta be delusional, man. It's just
gotta be a bit delusional. Yeah, easy. Well, all right. So I got a meeting with at my son's school.
Go for it, mate.
So I gotta run. And you guys make sure you pump that price of Bitcoin. And tomorrow we'll be back and we're going to talk about Bitcoin again with Dirk. And we're going to be talking about how close are Bitcoin to that 1 million target. All right, guys. Take care. See you guys tomorrow.
See you.
And then there was 2. And we got Victor for an extra little bit of time today. So normally he's here for only 1 hour, guys. So you are lucky, very lucky that he's so nice to stay with us for a little bit longer. Let me pull out the winners. Victor, can you tell me, have you got access to the YouTube? Can you tell me how many likes we've got here?
Sure. I can. Don't have access, but I can look it up.
Let me have a look. I've jumped on it. Yeah, it's come through. So we've got 720. We're gonna round it up to the 750. 2, 4. And it's every, yeah. Okay, no, so it's 700. It's every 700.
Yeah, 734. That's what I see as well. So you're gonna do 3?
Yeah, I think it was at every 250, if I'm not mistaken. Let me double check with Thomas. The reason why we changed it because everybody was upset because it's only one 250k account, so we wanted to do more. Wanted people more of an option. But okay, so every 100. Okay, so every 100 likes is 2.
Yeah, that's what it says too in the details in the box below.
Okay, I'm gonna need to add more get more winners then. So we're doing 14. There you go. Oh, don't say I can't change it now. There you go. Update. Okie dokie. We're going to do 14 winners. Draw prizes. Bootcamp. We're not going to allow repeated winners, unfortunately. Okay. Wicked. So we've got a lot of people that have claimed their loyalty bonuses, and that's why they've got it. So you've got Regan, Jahan, Mario, Marge. We've got somebody from Twitter, Amalasu 19. I'm botching everything up. I do apologize. Max, Efson, Wersim, Anas, Ricardo, Abdullah, Forex, Smosh from India, Gajenda, and Peter. So people all the way from, you got Hungary, India, Canada, South Africa, Pakistan, Ethiopia, you got the United Kingdom, Estonia, all people from across the globe. That's fantastic, guys. So you're going to all get an email from myself with the code as well for you to redeem the 20K bootcamp. And that's it. So any last words, Victor?
I congratulate all the winners. This could be that little seed you need to grow to start your trading career. You only need one start, one step, and this could be it. So make good use of it, guys.
Yeah, 100%. And again, we had somebody that won the giveaway last month, and he's just passed his account, and he's going on to his funded account already. So he's going to be on the stream on Wednesday. But anyway, take care, guys, and thank you very much for coming on.
See you guys tomorrow. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide.